We got a couple fresh reads on the economy this morning. Wholesale prices were flat in July, better than economists expected. Annual producer inflation cooled from 5.5% to 4.7%. On the jobs front, initial unemployment claims ticked up to 209,000 but remain historically low, while continuing claims actually fell. Let's bring in Jeffrey Small, partner of Retirement Income Source. Jeffrey, good to have you. So is this the economic sweet spot? What's your read on today's data?
Well, today's data was really great, actually. I mean, it shows that the traveling type of inflation is really starting to trend in the right direction. And the Fed is not hawkish, it's not dovish, it's data-ish. And so this will motivate the Fed not to raise rates since producer price indexes fell, actually, here, Alicia. This is great. And so we're also in a low hire, low fire and job market as well.
Yeah, on that, the low hire, low fire labor market, what does it actually mean for average Americans? Is this still a healthy job market?
It's very healthy. People that are unemployed are finding jobs faster, and companies are still hoarding their workers. They're not laying people off. And so that's good news, for the employment base in America.
So the producer prices came in flat. Economists were expecting an increase, actually, so that's good. How significant is that? And, are we finally seeing inflation move convincingly at this point in the right direction?
We really are. I mean, the PPI last month was on pace for 5.5% annualized, and now we're down to 4.7, which is a really healthy drop. And so things that companies are paying for on a wholesale basis before they come to market for us to buy have fallen in price. And that's the opposite of what we expected at this time. We expected that to trend up because we know the economy is firing off and very strong, Alicia.
Right. Yeah. 4.7 producer inflation still elevated, cooling from 5.5%. That's good. But inflation cooling shouldn't be confused with inflation is solved. Where do you see it heading?
It's definitely not solved. We expected inflation to maybe tick up a little bit in the fall. It doesn't look like that's going to happen. We see this hopefully as a trend, which will further incentivize the Fed to maybe do a rate cut for us this year, even though it's too early for that call. Right now, the data is just telling us that the Fed has another reason not to raise rates in the fall in case we see things creep up again.
Yeah, because I think economists, the expectation of them raising rates, I think the percentage of them possibly doing that went up. But now with the Fed's calculus on today's PPI, do you think it takes a rate hike off the table?
I think it does take a rate hike off the table for now. I said that at the Fed meeting a couple weeks ago here, I said there was a 0% chance that rates were going to go up at this time. And so I think they're waiting to see what the trend line is going to be here. And like I said before, the Fed is neither hawkish nor dovish. They are data-ish. And that is creating a Goldilocks environment for the economy and for employment and also for the markets.
Okay. Jeffrey Small, partner of Retirement Income Source. Thank you for your time today. Appreciate it.
Thank you.